What's going on, guys? Welcome back to Clay's Coins. I believe competence creates confidence. That's why I'm here to bring you some information, education, and better understanding of cryptocurrency and the stock market. Today, we're going to be talking about the biggest threat to the U.S. crypto industry, as reported by Dow Jones. Well, not necessarily literally the stock Dow Jones, but it's paid for by them, and it's actually a pretty credible article, honestly. It's not a bunch of FUD mongering like you usually see from The Motley Fool or Forbes, any of these financial institutions. They actually, I pre-read some of the article, and it looks pretty good for you guys. Now, obviously, unless you live under a rock like Patrick, or you're one of the 3 people in the entire world who own cryptocurrency and don't check their Coinbase account every 15 minutes, Bitcoin's been hurting. Ethereum's been hurting. Especially Bitcoin, though, just fell off an absolute cliff. Began to become a falling knife, fell through a bunch of support lines, and is now sitting at just over 19,000, which is where it was like January 12th or 13th. So we're coming close to almost resetting all the gains we've made thus far. Why? Well, a couple of different factors. Number one, from a technical standpoint, it makes sense. We knew there was going to be some sort of correction. It's only healthy. You didn't really want to see it fall back down to where it was, unless it's going to test that support line and bounce back up. Because technically, we rose to where we were. Bitcoin was even lower than that not too long ago, talking about like last fall. So, for us to get down to 19,000, 18,000 or so, and then pop back up might not be terrible technical-wise. However, there was a massive financial institution that is voluntarily closing down, essentially. That is what we're talking about today, Silvergate. Before we get into the video, guys, go ahead and smash that like button, hit the subscribe button if you haven't already, comment down what you made the most money off of recently, because I have an idea, if you watch my videos, which cryptocurrency it might have been. Hint, hint, I made a little short about it yesterday when I was on the road because my Twitter feed went absolutely crazy. I had a couple people DM me and let me know about it, and so it was it's pretty cool. Anyways, guys, let's get into the video. First things first, just looking over at CoinMarketCap, as we always do. 22,852 cryptos currently in the world, 567 exchanges, and crypto has officially fallen back under the $1 trillion market cap, making it like less than half the size of Apple. Just the company Apple, nothing else. At about $932 billion at the time of this recording, the entirety of the global crypto market cap is down 5.66% from the past day, which yesterday, as you guys know, wasn't a great day either, which means you can see right here Bitcoin being down 10.8, almost 11% on the week, down 13% on the month, and is now starting to come back down to reality, back down to earth with those 90-day percentage gains at only about 16%. Ethereum, even though it's not as large, the percentile scaling has been very, very close to Bitcoin. Even though they're the 2 top dogs and they're, maybe competitors for the number 1 crypto, even though it hasn't been a competition for a long time with Bitcoin just because it's so large. You can see the price correlation is quite similar when you're talking about even the hour, 24-hour, 7-day, 30-day, and 90-day. The only difference is Ethereum actually is now not providing as many gains in the 90-day because on the 30-day, it's down even more than Bitcoin. Even though on the 7-day, it's not down as much, on the 24, it's down more. Technicals are a lot of chart work, but this is looking at my Bitcoin chart. I did notice something that might not necessarily be the most bullish indicator. I always bring you guys the facts. That's why I say competence creates confidence, because the more you know, the more confident you'll be in how things will play out, and when things actually happen, you'll be confident in the fact that you kind of expected it to happen. So, we peaked at about, just over 25,000, 25.5. We couldn't break this resistance mark right here. That was where we peaked in August of 2022. We had a very, very big run up, and that's where we peaked out at. We also peaked out there just recently. That isn't great. We weren't able to get through that resistance. Maybe we will. This isn't some, this isn't fudding Bitcoin or anything like that. I truly believe long term in crypto. But short term, it might not be back yet. We could be seeing a longer term almost dead cat bounce kind of bull trap, and potentially even a longer term double top is what this is appearing to be, because we're now heading back down to test this mini support line that we kind of just formed after we peaked last time. So check this out, guys, because when we peaked at about 25,200, 300, right around there, August 15th and 16th of 2022, we quickly fell down, had a little bit of a period of upwards channeling, and fell down again, and created this weird little psychological support line that actually kind of became a channel for a little bit there, right at the 19,500 mark, and it hit for, over a week. We had never broken below that. We started to, flew up past it, came back down, and as you can see here, the channel was actually a decently tradable channel for a little bit between this little 20,000 minor resistance and this 19,400 support line. Obviously, we know how history played out. We ended up falling way down towards 14,000, 15,000 Bitcoin. About 15,500 is the lowest on this chart it's showing. And obviously there's some flashes in the pan that can be a little bit more extreme, but going off of the daily candles here, that's just what we're looking at. Then, in the beginning of January, we started to run. We ran up a huge amount over the course of 2023 up until we peaked at about 25,300, 25,400. We then fell down sharply. And we skipped this little, sideways, maybe also ascending channel that we saw. Granted, we didn't have as big of a knife fall as we did before, but we skipped this sideways period. We thought about trying a sideways period right here. We flew right through that and came all the way back down to the 19,400, which is where this channel began when we started trading sideways before another massive fall that led to the really, really downwards period in November and December of last year. Past performance does not indicate future success, nor does it indicate a future probability of something happening. That is very important to remember with chart work and technicals. However, humans are great at identifying patterns, and this is definitely a pattern to keep your eye on. This does not mean it's set in stone. Obviously, a huge reason for this big knife fall right here to fall all the way down is because of the news we're about to talk about, which is this whole crypto bank, crypto lending platform voluntarily closing down. That's a big thing, guys, because they've been around since 2013. They're 10 years in. They've been around since crypto was really just taking off, and they're winding it down. So let's look at the article right now. Alright, so this article is brought to you by MarketWatch, which is funded and paid for by Dow Jones, I do believe, because one thing in 2023 that I definitely recommend you guys do is when you're reading an article, always look at who wrote it, who they work for, who they've worked for in the past, whatever, if you want. Much more importantly, look at the company who put it out and look at who owns the company. Who are the major shareholders of that company and or who sits on their board? Because oftentimes you'll see that a lot of these companies that are talking poorly about something, they're owned by the competitor of what they're talking poorly about. It's funny how that works, and it kind of sounds like a P word, maybe propaganda. I know, that's crazy to think about existing, but it kind of has. Since we've had news and media, we've had people lying to us through the news and media for views, for their own personal financial gain, for the growth of their company. It's kind of like they're bettering an organization that's making money off of crime. That's a RICO act where I'm from. Ask Young Thug about it. So, either way, MarketWatch reports that Bitcoin tumbles as Silvergate Bank's collapse highlights the biggest threat to the U.S. crypto industry. That is a very dramatic title. Francis Yu is who wrote this, and I really like this. It says an earlier version of this article incorrectly described Signature Bank as a crypto lender. The article has been corrected. They noticed there was something wrong with what they said. They corrected it, and then they put a citation saying right at the top, as soon as you go to read it, that it was incorrect. It was an earlier version. they've corrected it. That's awesome. Why? That is so easy. Why do these companies double down when they get things flat out wrong and then back it up by saying, oh, no. The person who told you that this was wrong is wrong. Like, just correct it. Everything doesn't have to be political. Major cryptocurrencies tumbled Thursday after Silvergate Capital Corporation, SI, on Wednesday said it intended to, quote-unquote, wind down operations and voluntarily liquidate its subsidiary, Silvergate Bank, a crypto-friendly lender, a week after La Jolla, California-based company, said in a regulatory filing that it was at risk of being less than well capitalized, i.e., they're broke. I spoke to Matt Hoogan, Chief Investment Officer, CIO at Bitwise Asset Management, who said that Silvergate woes point to the biggest threat for the crypto industry in the U.S. As always, find me on Twitter at I'm not promoting your Twitter. I like how you snuck that in there. That's kind of funny. If I ever get a job writing articles for places, I'm just going to plug my social media handles in the articles. I mean, what is that? The Silvergate woes. The liquidation of Silvergate Bank might accelerate a concerted effort to wall off the U.S. banking system from the crypto industry, said Bitwise's Hogan. Hogan, let me know in the comment section down below. Such efforts will introduce more risks to the crypto market. Silvergate's collapse means the end of a key player that enabled banking for many crypto companies and is likely to intensify the regulatory scrutiny around banks' relationship with digital assets entities, noted Hogan. Still, it is fortunate for the crypto industry that Silvergate's liquidation is happening recently instead of a few years ago, when the lender was arguably the only bank that was willing to work with crypto clients in the U.S. Banks have traditionally been reluctant to provide services to crypto entities, partly due to a lack of regulation, according to the industry participants. Founded in 1988, Silvergate wanted to change that. They started taking crypto clients in 2013 when the lender began to see rapid growth. Now, even though the crypto industry will be hit by Silvergate's crash, it has grown large enough to weather out the demise of one bank, said Hogan. That is very important to remember, guys. It gave you some facts, gave you some reporting from different sources, and then told you that, contrary to the overall sentiment of this article thus far, even though it will be hit by the crash, which we're feeling right now in real time, it has grown large enough to weather out the demise of one bank. Because realistically, even though it was the first bank to offer it, it is no longer the only bank to offer it. So, this is a stair step down, but it doesn't take the stair set away. There isn't no more floor. We're still, coming down, and we can go up another level. This is okay. It's a bump in the road. It's not the end of the road. New York-based Signature Bank, SBNY, said Thursday it's maintaining a strong, well-diversified financial position and limited digital asset-related deposit balances in the wake of industry developments. Shares fell more than 12% on Thursday amid a broad bank sell-off in the wake of announced Silvergate wind-down and as shares of SVB Financial Group plunged. Obviously, when a lot of people are invested in something like this, a lot of big players, they're going to sell off when when big players are invested in a company and they say we're shutting down a massive reason that we're a big company, people are going to sell. They're going to get out, they're going to just throw money into the dumpster fire and get out as fast as they can to cut as many losses as they can so that fire doesn't spread to their bank. Signature Bank provides deposit services for its clients' digital assets, but does not invest in, does not trade, does not hold on its own balance sheet or provide custody of digital assets, and does not lend against or make loans collateralized by such assets, the company said. They wanted to be very, very clear of what they do and what they're actually stopping. What they're stopping is the deposit services for its clients' digital assets, i.e. Coinbase, Kraken, Gemini, Binance, BlockFi, if they're even still around, Crypto.com. Where are they? Those are companies. Companies still use banks. They don't just have mattresses full of money or a bunch of money buried in the backyard. I mean, they probably do, allegedly. But they also use banks. So now, if they don't have a place to bank, where are they going to put their money? That's going to be a huge, huge speed bump or roadblock when a company, a crypto company, is first coming about. I live in Maine. In Maine, marijuana or cannabis is recreationally legal. It's also medicinally legal. We passed it a few years ago. However, cannabis is still federally illegal. What are banks backed by? The Federal Reserve. Meaning, even though it might be a smaller franchise located in your area, it is still backed by federal money and federal regulations. Meaning, bear with me here, any cannabis shop owners that sell recreationally cannot use a bank to put their money in because they're making money off something that is federally illegal. This is one of the first things I thought about when it came to, these big centralized entities starting to slang crypto. You know what I mean? Just like Coinbase. They have all this money circulating, but a lot of it isn't necessarily federally backed, so a bank is not going to want to touch that. So where do they put their money? Then you see a lot of things like FTX or Terra Luna or, different places with like money laundering and embezzlement and different things like that. Because when you can't put your money in the banks, you find somewhere to put it. These people are brilliant with money. They're not just going to sit on cash, which is what a lot of the cannabis companies and owners have to do in the state, is sit on cash or put it somewhere, because they can't just walk into their bank and deposit $30,000 of cash. The IRS wants to know where you got that, and the IRS is not state-based, it's federal. So, there's many, many, many concerns when it comes to something even if it's not federally illegal, but if it's not federally regulated, being able to use an entity that is federally regulated can be difficult. Let me know in the comment section if that makes any sense, because it makes a lot of sense to me in the, when we talk about something comparable that we've seen evolve over time, which over many, many states in the U.S. now is like cannabis. It's not federally regulated. It's still federally illegal, but there are many states in which it's not only medically legal, but even recreationally, meaning anyone who's 21 or older can just walk into a dispensary and buy it. So, I don't know. The fact that anyone can just walk in and buy it, but then the store owner who makes that money can't put it in a bank is just, there's clearly a gap in the system that is not nuanced enough for these massive industrial revelations and things like crypto industry, cannabis, AI, big tech. We need to nuance these laws and regulations to help keep up with it. Some large traditional institutions such as JP Morgan Chase have been working with a few crypto companies. The global banking system is going to find a way to have crypto as a customer. I suspect we will find a way in the US for the more regulated parts of the crypto industry to have more stable, traditional banking relationships. The market capitalization stands close to $1 trillion, down over 60% of its all-time high of $2.8 trillion in November of 2021. What a time to be alive. While still up massively from below $400 billion in 2019, according to data from our well-known friend CoinMarketCap. JP Morgan and Gemini. Crypto exchange Gemini Trust has denied that JP Morgan is ending its banking relationship with the company, which was reported by CoinDesk earlier Wednesday, citing an anonymous source. Gemini's banking relationships remain intact with JP Morgan, the crypto exchange wrote on Twitter. Maybe choose a different avenue for that, but at the same time, it's a massive public forum, but I just have a hard time taking many tweets seriously. It's just like, JP Morgan reportedly took on Gemini and Coinbase's customers in 2020. Representatives at Coinbase didn't respond to MarketWatch's request seeking comment. The Coin. The U.S. Securities and Exchange Commission on Monday announced an emergency action against Miami-based investment advisor BK Coin Management LLC and one of its principals, Kevin Kang, alleging that they are in connection with a crypto asset fraud scheme. The SEC said in a statement that it successfully obtained an asset freeze, appointment of a receiver, and other emergency relief. The emergency action was filed under seal on February 23rd and unsealed Monday, according to the SEC. BK Coin raised around $100 million from at least 55 investors to invest in crypto between October 2018 and September 2022, but the firm and Kang allegedly used the money for personal use and Ponzi-like payments, according to the SEC. Ponzi schemes refer to frauds that generate returns for early investors with money raised from later investors, i.e., you give me your money now, when we get someone else to give us money, I'll give you their money. This scheme keeps working and we keep getting money to play with because when you give me your money, I spend it. You don't have anything. I never invested it in anything. Maybe I bought myself a new truck or a new house with some of this money. Then I have to recruit someone else, or better yet, get you to recruit someone else. Now you bring someone new, they pay to get in, I give you your money, now you think you're making money off of whatever you're investing in, not knowing that this is a straight up fraudulent scheme. This is a very, very dangerous thing, and you see a lot of different code names for Ponzi schemes, pyramid schemes, MIMs. It says Bitcoin lost 9% in the last week and was trading around 20,806 on Thursday. Ethereum, I hate it when they call it Ether, tumbled 7.5% in the same period to around 1,482. Obviously, at the start of this video, we saw that those prices are actually much worse. It goes on to give some nonsense right here about the biggest gainers in price for a 7% or a 7-day percent return, which is, I don't even understand. They're looking at 3 tethered stable coins, looking at Leo token, and then looking at CUSDC, which I'm not even sure what that is. But, and then they talk about the biggest decliners: Stacks, Render Token, Fractshare, Mina, Singularity.net. I don't know what they're looking at for the 7-day percent return, because Measurable Data Token has returned more than that. Aventus has returned more than that, and a couple others have for sure. Leo Token is not even necessarily a real cryptocurrency in nature. It's essentially a token that is buying back money that was lost to people who invested in the company when it had some big problem at first. Can't remember off the top of my head, but it's essentially, that's why it's like almost always not in correlation with anything else in the crypto market. That's the reason why. So all in all, guys, is this the biggest threat to the U.S. crypto industry? No, I don't think so. I don't think Silvergate closing down its crypto, whatever they want to call it. They don't like it being called crypto lending, but whatever they want to call the services that they had, that they're shutting down. At one point in time, a while ago, it was the only one. However, it's not even close to that now. We'll see what happens with cryptocurrency. It, like many professionals, executives, officers have said, it's not the worst thing that could happen to crypto. We will get through this. The entire market is much stronger now, much healthier, and thicker than it ever was. We can take a little bit of damage and bounce right back. So we'll see how we hold up the next couple weeks when it comes to technicals. Fundamentally, this can happen, guys. I mean, this is one of the things with technical analysis, especially with the crypto market. You can do all the charting you want. You can have all the excellent indicators that you could fathom, and then something like this happens and it just destroys the market. We're talking about like 10% on the market cap across the board was lost over the last couple days. That is a significant amount of money. We can't really progress too many things without Bitcoin and Ethereum also progressing. That's why my Aventus call out was pretty crazy, because when everything else was on fire, Aventus went up 100% on the day. I don't know. Might want to hit that subscribe button and notification bell so that way when I come up with another crypto that's going to go crazy while the world is on fire, you guys won't miss out on it. Put a flexing emoji in the comment section down below. As you guys know, stay happy, stay healthy, stay humble, stay hydrated, stay hungry in these crypto waters, because we're the sharks, not the minnows. Thank you, guys.